There is a scary number of retail companies going bankrupt during this 2020 economic crisis, which is destroying jobs, hurting the economy, and could devastate the commercial real estate industry. But this also means opportunity for you if you know where to look, and by the end of this video, you'll know exactly what I'm talking about. What's up, everybody? I am Jaspreet Singh from theminorityMindset.com and welcome to the Minority Mindset. The four industries getting slammed the hardest by this 2020 recession are travel, entertainment, restaurants, and retail. We've already seen major retail companies like JCPenney, Neiman Marcus, Pier 1, and J. Crew declare bankruptcy. And now that list just got a little bit bigger because Lord & Taylor and Men's Wearhouse's parent company are now on the bankrupt list. In the first 8 months of 2020, 43 major retail companies declared bankruptcy. Now, to put this number in perspective, in 2010, during the tail end of the Great Recession, 48 major retail companies declared bankruptcy, and in 2008, when the whole Great Recession was starting, 441 retail companies went bankrupt. So we're on track to see the most retail bankruptcies in a decade, but we're still nowhere near the 2008 levels, and hopefully we don't go there. The concern every investor has right now is that there are a lot of businesses out there that are alive only because of all the free government money that's been floating around. This is through bailouts, stimulus checks, and unemployment checks. So as this free money goes away, that's going to be the real test of our economy. When a store goes bankrupt, it doesn't just happen in a bubble. First, the employees lose their jobs, then the overall economy gets hurt, and then the commercial real estate market gets hurt because the number of vacancies go up. And with all the retail bankruptcies happening right now, you have some very wealthy investors shorting the commercial real estate market, and I'll be talking more about this towards the end of the video. Now, before we get into those three things, jobs, the economy, and the commercial real estate market, I need you to hit that thumbs up button below, because if you don't, then YouTube will be less likely to show you any of our other financial education videos. According to the United States Bureau of Labor Statistics, the #1 most popular job in America are retail salespeople with over 4 million Americans. And the #3 most popular job in America are cashiers with over 3.5 million Americans. Well, this 2020 recession is wiping out our #1 and #3 most popular job in America. I've been talking a lot about job losses during this 2020 economic recession on our YouTube channel, so if you haven't subscribed to our YouTube channel yet, make sure you do that. But what's kind of scary and worrisome is that these job losses really started to pick up in March and April. In early April, that's when these job losses peaked, but then job losses started to slow down until mid-July. In mid-July, that's when we saw these job losses start to pick up again. If we focus in on retail, retail is a very low margin business. So these retail stores need to make a lot of sales before they can make a single dollar in profit. But if you go to the mall right now, what you'll see is that a lot of stores have signs saying that there's a limited number of people that can shop in the store at one time. So that means these retail stores have a limit to how many people can be in the store at one time, which limits how much money they can make. And if they have very low margins, that means they're not going to make as much money, which means we could see more business closures. And this is just one reason why the economy cannot get better until the virus goes away. Our economy works in a cycle. The more money you have, the more money you can spend. And the more money you spend, the more money a business makes. The more money a business makes, the more money that they have to hire more employees. And the more employees that have jobs, the more money that people have to spend. So it's a cycle. Now, as a smart financial planner, you're not going to be going out and spending every last penny that you have. You're going to spend your money smartly. But if people are not spending money, like if spending is cut in half, whether it's because people don't have a job anymore, they don't have money coming in, or it's because they can't go into the store to shop, that means businesses are going to make less money. And if they make less money, that means they're going to have less money to pay their employees. And if they have less money to pay their employees, that means there's going to be less people employed, which means less people have money to spend. So now we're in a negative spiral. This negative economic spiral is what we are experiencing right now, and it affects us, people, in two ways. One at the consumer level and one at the investor level. On the consumer level, if Lord & Taylor shuts down, that means the employees that worked at Lord & Taylor are not going to have a job, which means they might not have money to pay their rent, which means they might not have money to go out and buy the new Ford Bronco, which means they might not have that money to go out and fly to Disney World and go see Mickey Mouse. That means we could see more evictions, and we could see more landlords going into default, and Ford might not make as much money because people don't have money to buy their new cars, and Disney might not make as much money money because people aren't going to visit Mickey Mouse. It might seem like a stretch, but this is exactly how our economy works. We have a very interconnected system. So now, if a major retail company goes bankrupt and 30,000 Americans lose their jobs, now multiply that by dozens of different bankruptcies, this is what we see happen in the economy. You also have financial pain at the investor level because you have banks and investors who gave their money to companies like JCPenney, Nordstrom, and Lord & Taylor, and now that they're going bankrupt, these investors and banks are gonna see huge losses. When a major retail company goes bankrupt, billions of dollars of wealth literally just disappear. The multi-billion-dollar market caps of these companies get wiped out, people's investment funds get sliced, and people's retirement funds get slashed. This is the bad news. The good news, because yes, there is good news, is that with every crisis comes opportunity, and that's where you, as a minority mindset thinker, want to be looking. The stock market is emotional, and sometimes, or a lot of times, a company's stock is going to be affected not by what's happening in the company, but by what's happening in the industry. When something really bad happens to an industry like retail, then lots of retail stocks are going to get hurt, even if a retail company is doing really good. This is where you want to come in. Be patient, find a strong company and buy it, because recessions and crashes create some of the biggest transfers of wealth that we see in history. Just make sure you do a few things. First, make sure you understand that investing is a long-term game. Second, look at the numbers. Make sure the company that you're investing in isn't on the verge of bankruptcy. And third, don't invest more than you're willing to lose, because investing has risks. You are never guaranteed to make money when you invest. You might even lose money. So always, always, always do your own due diligence and never blindly listen to a random guy on YouTube. If you do those three things and you stay patient, then you can use this retail crisis as an opportunity to come out of this a financial winner. If you want to invest in stocks, you have to use a stock brokerage like our sponsor, Webull. Buying and selling stocks with Webull is easy. All you have to do is create a free account, fund it, and then you can buy and sell whatever stocks or ETFs you want, and they don't charge you a penny to make a trade because Webull is a commission-free brokerage. You can invest in stocks right off of your phone or your computer, you can chat with other investors on their app, and you can do your research for stocks on their app too. And the best part of all is that Webull is giving you, Minority Mindset fans, 2 free stocks just for investing with them. You get your first free stock when you open up your free account, and then you get your second free stock valued at up to $1,400 when you deposit $100 into your account using our link in the description below. So if you want to learn more, get started and see how you can get your free stocks, I got the link to where you can do that in the description below. Minority Mindset is a partner with Webull, so if you use them, we will get compensated, but there's no additional cost to you. It's free to open an account and they don't charge you a penny to make a trade. So if you want to learn more and get your free stocks, I got the link to where you can do that in the description below. This brings me to the commercial real estate market for all of you real estate investors. Stores and retail companies are some of the biggest tenants in America. Stores, whether we're talking about malls or strip plazas or freestanding buildings, make money when you shop there. So stores make money when you shop there, and then they pay some money to the landlord. Now, when the landlord makes money, they're going to pay some of this money in interest to the bank for giving them the loan to own the building. If dozens of major retail companies are going bankrupt, that means we're going to see thousands of retail units across the country go vacant and stop paying rent to the landlord. If landlords don't make money, then they don't have money to pay their banks, and if banks don't get paid, well, just wait a minute and you'll understand. Carl Icahn, who's one of the world's wealthiest investors, is making a huge bet by shorting the commercial real estate market. According to him, we are seeing a repeat of the 2008 real estate collapse, except now it's not with residential real estate, it's with commercial real estate. What has been happening is banks have been making all these crazy loans to real estate investors to buy or build up these retail buildings, whether it be malls or strip plazas or freestanding buildings, and then as soon as the bank makes this loan, they turn around and they go to the insurance company and they buy a credit default swap. CDS, you remember those? Here's how a credit default swap works. Let's say I'm a bank and you are a real estate investor who wants to go out and buy a mall. So I'm going to loan you, let's say $50 million to go out and build or buy this mall. But if you stop paying me on this loan, then I could lose out on a lot of money as a bank. I don't want that to happen. So I'm going to go over to my insurance company as soon as I give you this money, and I'm going to say, hey, insurance company, I just gave my friend here $50 million for this loan, but I don't want to lose money in case they stop paying me. Can you provide me some insurance on my investment, this loan that I gave to you? The insurance company says, okay, Jaspreet, we'll insure you, pay us some money, and then we'll insure your investment that you gave. That way, if this person defaults on their loan, we, the insurance company, will come in and pay you. So a credit default swap is insurance on an investment that a bank makes. So now, I give you a check for $50 million, and you go out and you buy this shopping mall, and things are fine. You have tenants paying you rent, but then comes 2020 and this pandemic, and now lots of your tenants are shutting down, and you don't have money coming in to pay me. That's when two things happen. First, I'm going to foreclose on you because you're not paying me, and then I'm going to go over to my insurance company and say, hey look, they're not paying me anymore. I need you, the insurance company, to pay me on this credit default swap. Crazy, right? If the banks win, they win big, and if they lose, they still win. This is exactly what happened in 2008 in the residential real estate market. You had all these Americans being foreclosed on, and then the banks were like, okay, let's go to our insurance company and exercise a credit default swap. So they went to the insurance company and said, okay, insurance company, pay up. And the insurance company started paying, but they didn't realize how many people were going to be foreclosed on. So the insurance companies ran out of money, and they didn't have money to pay the banks anymore. And so the insurance companies were on the verge of failure, and that's when the insurance companies got bailed out. And this was what the big short was. The big short was people shorting the real estate market by shorting these insurance investments. Now, Carl Icahn is doing the same thing, except this time he's shorting the insurance investments on commercial real estate. Now, shorting commercial real estate isn't very easy for the regular investor, but this is something you want to pay attention to if you are an investor of commercial real estate, because that could mean that there are more deals coming in the commercial real estate market. Now, obviously, I can't predict the future. This is something I'm keeping my eye on, and this is interesting because real estate doesn't move as fast as the stock market, right? Like in the stock market, you can buy and sell stocks in a matter of seconds. In real estate, it could take a year or even longer to foreclose on a property. So this is something that's going to take a slow process, and you want to watch what's happening, and we'll be keeping you updated on our financial newsletter. If you were unaware, Minority Mindset has a free finance and business newsletter where our team first breaks down the top finance and business news, and then we show you how this news affects your wallet. That way you can be smart with your money. This newsletter is completely free, and you can subscribe to our finance and business newsletter by clicking the link up here or by clicking the link in the description below. By the way, our financial news emails are separate from our financial education emails. Thank you for watching. If you enjoyed this video, share it with one friend, that way we can help spread the word. If you want to hear more about the commercial real estate market and what might be coming in the commercial real estate market, I already made a video on this, and you can watch this video on YouTube by clicking this button right over here. Thank you for watching, and as always, keep hustling.